ECB unlikely to intervene despite euro's rapid appreciation. TD Securities.
Bay Street likely to open on firm note.
U.S. stocks may move to the upside on upbeat Meta earnings, guidance. Gold, silver prices hit record highs. Gold nears $5,600 Z. U.S. initial jobless claims dropped to 209K last week. U.S. trade deficit widens much more than expected in November.
Copper hits record high above $14,000 as speculators pile in. U.S. weekly jobless claims edge down to 209,000. Mixed sentiment as earnings, geopolitics weigh.
Australian dollar outpaces G10 currencies amid heightened RBA rate hike expectations. Kiwi dollar US dollar rises for 10th consecutive day on robust NZ trade data.
Gold surges to fresh record highs amid geopolitical turmoil.
Tough day for David Tepper as WHR stock falls 8%.
Ni hao ma. Morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never, ever, ever risk money you cannot afford to lose. Hey, my name is Wayne. Welcome to my home office. Look at that. Look at that. Great. Nice, huh? Yeah. Welcome to Forex.Today. So we're going to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. In fact, YouTubers, if you're logging in and going, hey, what's up, fellas? Hang on. You're like, hey, what's up, fellas? What are we trading today? You've already lost. We're already on tomorrow. We're already on next week. Right? You should never log in and going, what am I doing? What time is it? It's you know? Yeah, you got to have some malice of forethought. So anyways, technical, fundamental analysis, seasonal sentiment, correlations, spike analysis, risk analysis, trend analysis, technical analysis, fundamental analysis. We got it all. Let's go. There you are. Where'd you go? G'day, mate. How ya? How's your mum? So anywho, interesting world. The Fed is not worried about unemployment rising. They're not worried about inflation rising. We had a claims today that showed, what was it, 209? So anywho, without animation. So anyways, 209? Not bad, right? So let's start with the headline. Radar, get an update on news that's come out recently. Canada, inflation measures under scrutiny. NBC.
Tough day for David Tepper as WHR stock falls 8%.
Gold surges to fresh record highs amid geopolitical turmoil.
Kiwi dollar, US dollar rises for 10th consecutive day on robust NZ trade data. Australian dollar outpaces G10 currencies amid heightened RBA rate hike expectations.
Slovakia economic sentiment weakens in January. Mixed sentiment as earnings geopolitics weigh.
ECB unlikely to intervene despite euro's rapid appreciation. TD Securities.
Yeah, is it a rapid appreciation or rapid depreciation of the US dollar? Huh? Could be a rabbit, could be. Oops, I wanted to go here. Wow, that price is real, huh? 66 on oil. Pop that much, huh? Wow, crazy. Gold, 55.25, up 4% already. Jiminy Cricket. You know, the thing about oil is we were bears and bears and bears and bears and bears and bears and bears for 6 months. Bears, bears. And about 3-4 weeks ago, I think it was, it turned more neutral when we were down closer to 50. And then we turned bullish. And it's been bullish ever since, which really gives me confidence in our energy complex radar. Very cool. And to just see it at 66 now is just amazing. Silver, yeah, it's only up 120 bucks for today. I laugh. I laugh. I laugh. Well, first of all, it's not up 120. It's up 20 or something. So that's a little high. But the fact that we're at $120, dude, 35 is a lot of money for silver. 120 is next level. Obviously, the calculation's wrong. It's interesting that he put it over on the bear side, too. So there's something going on, but who cares, man? 120. Shut the back door. That is redonkulous. Just looking around here, looking around. So what it's doing is biggest winners and biggest losers, right? So silver's obviously not correct. Probably doesn't know what to do with it. But then over here, down 4%, down 4%, down 4%, down 3%, down 3%, down 3%, down 2.5%, down 2%. Okay. Looks like crypto's down, just like that. Now, if you're a crypto trader, you're like, just show me that. Well, the cool thing about this is, look, they're down. If you're trying to line things up, down is down. It's nice to be able to do that so quickly. Check this out. Money coming out of the 1, the 3. Okay, 1 month, 3 month, 1 year. The money is definitely coming out of the short end of the yield curve. And it's going into the 20, the 30, the 10, and the 2. Now, the interesting thing is yesterday, the 2, the 5, and the 7 were the biggest winners. But it looks like now we have money going into the long end of the year. Today, it's the 10, 20, 30. Very interesting. So what is this telling us? Do you know? I covered it yesterday at our FOMC live stream. The Fed is not expected to cut in the short end, but they're expected to cut in the next few years significantly. And so people are trying to catch duration, which isn't how much time. So a lot of people think duration means the 10, 20, and 30 years from now. The duration is a time issue. No, it's sensitivity to changes in interest rates, time being a key component, but it's not necessarily what's going on. And so anyways, you can visualize very quickly the yield curve. Now, don't worry about it. You're like, wait, I can't visualize the yield curve. Don't worry about that. We have that in our fundamental set. So you can. And the change in yield curve over time, we already have that. So don't worry about it. But the thing is, you can access it. What I'm most interested in is swing trading. That's my favorite, especially Thursdays. No bearish pairs over the last 7 days. That doesn't. Oh, and it dropped. Let me try this, and that doesn't look right. Control Shift R. Let me do a hard refresh. Well, definitely oil doing well. Notice that it's not calculating price or price change. Gold, dang it! We were working on this earlier. Do you say gall dang it or dang nabbit? I don't say both. I don't say either. But we were working that on that this morning, and we had it, and now we don't, and so I don't know what's going on there. But gold is giving back 1%, which is kind of interesting. With it, I don't think it's calculated 7 days. I think that gave back. Well, I think we're at 56 and dropped back down to 55. So that's probably miscalculated for day over day. Whatever, these are movers. Let's take a look at our risk gauge. Whoa! Wait. Aiden's had a brain fart. I've asked him to fix some commodity prices. And that is messed it up. Son of a. It was so nice like a half an hour ago. All right. Hang on. So we'll get that fixed. Yeah, so whatever glitch just occurred in the last half an hour, he's just missing this data. That's all. Has to repopulate. But the interesting thing is this score is based on what's happening today right now. And we're mixed. So you should be looking at cross pairs. Oh, there's a question. Will crude oil have any correction to back down to 62 to enter trade? Well, I don't know. First of all, I don't know. The second thing is, if there's an uptrend, that's what you're supposed to be doing, is waiting for the pullback. So it's not like, will it? Well, I don't know. How would I know that? But if it does, what are you going to do? And that's what you should know. You should be preparing for pullbacks and identifying, like, why do you say 62? Why not 63? Why not 64? Right? Do you remember in Talladega Nights? He's like, Dad, I lived my whole life on the principle of if you ain't first, you're last. And he's like, well, that doesn't make any sense, son. You could be second or third. Heck, you could be fourth. It could be 62.10. So it's more like, are you going to buy a dip? Okay. Now, once you got that organized, then the rest is just simple technical analysis, right? Let's see. I'm going to see if I can get the longer term stuff. So frustrating. Come on. We had it. We had it, dude. What did he do? Cool. So he's on it. Cool stuff, though. So I had some commodities on a whole different part of the app on the platform, and doing that messed this up. You're like, why? I don't know why she swallowed a fly, but anyways, kind of cool. It's working. All right. Yeah, we added nat gas to our analysis. That was part of what we were doing. I think the flicker is gone here. I think what he did, though, was just remove the animation and not actually solve the problem of the flicker. But I like the animation. So let's see, let it load. What we're doing is we want to look at all dollar pairs. We want to analyze short, medium, and long term all at once. There's a couple of ways of doing it. One is look for congruency. So that's where you want to look at numerators and denominators of the dollar, and do they show across the board dollar strength or weakness, because then you can isolate that like a dollar index. No. All right, I could probably fix this while we're while we're working today, but nonetheless you can still kind of see, look, okay, dollar on the numerator, denominator, numerator. Wow, this is all over. Okay, neutral, neutral, neutral. So really, what this is showing right off the bat is the market is mixed. Now, we looked at the risk radar, and it said the market was mixed to neutral. Now I'm looking at the dollar pairs, and it shows mixed to neutral, and that's where you should be trading cross pairs. And that's why I'm going to populate this with cross pair. Now, a cross pair has to do with relative strength, not macroeconomic trend. See, risk on, risk off. Let me go back to the risk radar. Risk on or risk off shows you the macroeconomic trend. If there isn't an underlying macroeconomic trend, then what you're going to see is not a trend in the dollar, yen, or Swiss franc up or down, but instead relative strength on other individual currencies. Because let's say if dollar is strong, it's going to overpower whatever euro is doing. Why? Because the dollar is a reserve currency. But if the dollar's not doing anything, and the Swissie's not doing anything, and the yen is not doing anything, but the euro's ripper strong, then what you want to do is isolate that, and that's a relative strength issue. So now you want to look at euro versus all the other assets, not just dollar pairs now, just euro pairs, or just pound pairs, or just Aussie pairs. And you might say, oh my gosh, look at Aussie. It's crazy strong. And now you focus on that. And you get that thought process from the risk score. Okay. I want you to look at this and say, not dollar pairs, not yen pairs, not Swissy pairs based on risk, but now you look at every currency individually, not as a macro trend, just what happens to be happening, which could be news that came out today. It could be geopolitics. It could just be that particular economy, like let's say there was an election, or a news came out and it was ripper good or ripper bad, but it would be very micro focused, meaning one blip in the matrix for one country, not the entire world. And that's what macroeconomics is. Focus on what the entire world is doing and then trading along with that. But if the entire world is kind of frozen today, well, there's still likely to be winners or losers based on the local economic situation or macroeconomic situation or whatever. Okay? And so I look at this cross pair. Done. You get populated yet? No. Oh no, that is today. Look at that. It is today. 209. Cake claims 209, but you can see it's not an uptrend. Why is this important? Well, yesterday, Jay Powell said unemployment isn't really a concern with the FOMC right now, nor is inflation. But when we look at this, the news came out today, 209, how does that fit in the trend? Well, these are people that lost jobs. And the amount of people losing jobs is diminishing. We're generally in a downtrend. We were up there at 237, and now we're at 209. And we're projected to drop below 200 by April. Now, this is us, not the government. This is aid in our artificial intelligence. So that's part of your alpha, if you will. So we're not really worried. Okay? We're not really worried about the economy collapsing. In fact, people are getting, less people losing jobs, unemployment not going up. In fact, unemployment maybe coming back down. Unemployment is not a concern. And that impacts monetary policy of the Fed. So it's really good to be able to see this, and it updated within, 15 seconds, which is pretty nice. It's not instant, but I'm getting closer. So what we do is we'll ping the Bureau of Labor Statistics seconds after it's scheduled to be released. And if there's no number, we wait a few more seconds and then ping them again. And if there's still no number, we wait a couple more seconds and ping them again. So we catch it pretty fast. But anyways, so impacts monetary policy. Monetary policy impacts things like global money. All right, he's saying he might have. U.S. can reduce. He says he might have fixed it. No? Try a couple of things. Get him to work done. All right, let's do this. Okay. The front end or the back end. Let's take the front end. No. Boo. We'll get him. He's working on it. Let's do some technical analysis. You guys like technical analysis? Ron does. So there's our technical analysis. Beautiful. Trying to take pound dollar north. Euro dollar I'm a little bit concerned with, but I like the the trend here. These are shorter term. These are day trades, right? So we're supposed to be able to get up here today on pound dollar. Aussie dollar dropping right back in our buy zone, right between the moving averages, right on a pivot point. The linear projection taking us up. Somewhere between our base and best case scenarios gets us basically M4R2. That looks very interesting. What do you think? It's gorgeous. USD Kitty Cat, if I was going to be a seller today, which I'm totally not against, because remember this bias is based on technicals and fundamentals. This is based on the chart itself, and then this is a future projection. So it's a leading indicator. This is based on, oops, click it. Okay, this bearish bias is lagging indicators, right? This Aiden's bias is fundamentals. But I'm going to add a new one for price action, and you can see this is leading. It's a leading indicator. It's saying in the future, we have it in us to drop further. And we're already bearish, but we've had it up for several hours. Well, that's exactly what we want. So right around that central pivot, I'd look to short, and there's our base case, but this is our best case scenario. And when you click on it, we have all that here. Okay. Cool. Again, I love being a swing trader. And we have that there. And we have this for crypto, stock indices. We added commodities. So let me move it to commodities. And let's see if that's which glitching. We were trying to add this earlier today. And some of the prices I didn't like. Okay, we fixed copper. That's good. Gold. Okay, it's using a futures price instead of the spot price. And that's one of the things we were working on in the background, which may be slowing our database or slowing some of these charts. But we had platinum and copper. One of these is nat gas. And this was because TRADARS subscribers requested it. Can you add nat gas? Can you add copper? Can you add platinum? So we did that, and adding that kind of glitched some other things. But don't worry, we'll iron all this out. But the thing is, the community asked for research on individual commodities, and the answer is, yeah, let's do it. So I believe this is nat gas, but it's not loading for some. Okay.
United.
Let's see, this is supposed to work. Let's try it again. I have to go through the same process. If it doesn't load, I'll try then I have to update that, and then I have to update this, and then I have to refresh that. Let's see if it works. Good. Now, will it open? Yeah. Okay, great. This is one of my favorite tools. All right, so dollars mixed today, right? Well, let's take a look. Dollar up, dollar down, dollar down, dollar up, flat, dollar up, dollar down. Mixed. So you should be looking at cross. Okay, and that's why I'm going to talk. It's cool, right? What about yens? Okay, get rid of the dollar pairs. Up, 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 up. Much better. What about Swissy pairs? Up, 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 flat. Cool. Well, let's take a look. Okay. Maybe a buy a dip scenario, but now you see trend on 3 time frames. You're like, I don't know if I like that. Well, you have to decide, is that a reversal? Right? What about this one? Okay. Maybe waiting for a breakout, needs to go higher before you can buy a dip. Again, 3 time frames. Maybe, but not great. How about this? Not making higher highs or higher lows. Okay. So we're very quickly just burned through, you know, how many pairs did we just burn through in less than 1 minute? 25 or 30? 30 pairs? And you can isolate, well, the ends look better than the other things. So let's take a look. Okay. Are you in love with that? Maybe not. Are you in love with that? Maybe not. Are you in love with that? No, because notice we're still in downtrends technically. Do you love that? No, not really. Maybe it made a higher low or a higher high, but it hasn't made a higher low. And we just burned through all these charts, and there's nothing but mediocrity. And you should be focused on cross pairs, which is what we saw in the risk sentiment gauge. And you're like, look at cross pairs, don't look at the other ones. And that makes sense when you look at things like the risk rate. Totally makes sense. So go back to our swing. Do you want position? I guess we could go position here because here's what's really happening. The projected high for for January. So back in December, we projected, okay, not predicted, projected, that euro dollar would get to 120 and probably stop, which it stopped. So we're done January. This is all about February. Same thing with pound. Back in late December, early January, our projection was it's going to go up to about 130. Or sorry, 138. You can see it right here. It's plotted 138 for the month, top of the month for January. So that's done. We have this bearish, and it's just warming up. Wait, these are annual. Sorry, I'm misspeaking here. Like Aussie dollar is about to hit our annual target, and it's still the first month. Whoa, that's how dramatic that is. USD CAD. Okay, this has been set short all year, and we're well on our way. You want to know what the annual target is? Right there. It's basically 130. So another 500 pips down. And that would be the base low. Question is, does dollar strength come back? What if investors just around the world, they're like, I'm not happy with the United States, but I need that AI, man. I need that AI. Give me that AI. Well, foreign investors make that decision, they need to buy the dollar first. And that stock market rally is not supposed to happen for another 12 weeks. So maybe they line up. And now you can make your own pairs. Like this is a way of doing a cross pair. Just show me the pound. Isolate the pound. Show me like a pound index, which is probably something I'll build again. I have it on my charts. We build our own pound index because you're like, wait, where do you get the pound index? I have a dollar index, but where do I get the pound index? You have to make one. Well, I already have one, and it's already on my MT4. So we could do it here. You start to see pound, dollar, bull, pound, Swissy, bear. We're already lacking congruency. Okay. Aussie yen, bullish for the year. Sorry, Aussie dollar, bullish for the year. Aussie yen, bullish for the year. Aussie Swissy, bullish for the year. Projections to continue, projections to continue, projections to continue. These are all daily charts with annual and monthly pivots. So what that means is you can go through this and just say, well, for now, I'm on a 15-minute chart or a 1-hour chart, whatever you like to trade on, you buy dips. That's it. Or if somebody says, so what are you doing in Forex? You're like, right now I'm focused on buying Aussie dollar. This is your long term. Remember, your strategy is based on this. What's your strategy? Buy dips on Aussie. And then you can go to your day trading or your swing trading and go ahead, buy your dips, girl. Go ahead, buy your dips. This is how I want you to be using this, where you make that determination. And does that look like a dip to you? Does that look like a dip to you? Does that look like a dip to you? Okay. Does that look like a rip? Well, that's too high for me to sell. Okay. What about this? Too high for me to sell. Okay. We want to buy a dip. That doesn't look good for me. If you wanted to buy a dip, that doesn't look good. First of all, it's projected to fall further. Do you want to buy a dip when it's expected to fall further? No. Do you want to sell a rip? Well, in this case, you want to buy a dip that's too low and projected. Sideways projection, they're neutral. So what did we want to do? We wanted to buy Aussie. So this looks good. This looks good. This looks good. That doesn't look good. That doesn't look good. That doesn't look good. And that doesn't look good. Done. So this is very much risk on, because now you can see dollar, yen, Swissy. 95% of everything I do are dollar, yen, Swissy. But do you see how we just like that? Just like that. Boom, 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 boom. So now I create my hit list. Now I can go to my charts, and now I can focus on that. But now I have an intent. I know what I'm doing and why I want to do it. What am I doing? I'm waiting for a dip. Are we in the right buy zone? Yeah, possibly, for sure. So look at your daily and your weekly pivot points. But open your charts and analyze, when is it going the other way? Now, one way of doing this, and I've showed you this on the, wrong one, on the trend radar. Let's go to the Aussie. And I'll make it so that you can do these other pairs, so you can just like pull up all the Aussie pairs, right? So we can do this maybe on dollar and Swissy, because what I can't do right now, in a further iteration I will, but I just want to look at Aussie dollar up, Euro yen up, Aussie yen up, Aussie Swissy up. And what I'm doing is waiting for this red to turn green. Now, if I'm doing technical analysis, I'm going to say, oh, it's going to kick off that roll reversal. Oh, it's going to kick off the psych level. It's going to kick off a daily pivot point. This doesn't do any of that, nor does it need to. You can sit on this page. You don't even need to refresh it. It refreshes itself, because this is all dynamically drawn. And you wait until that red to turn green, and then you go. So you should be ready, willing, and able. See, look, it just updated. I didn't do anything. Okay, what about Aussie yen? That's another big fat maybe. Is it time to go? No. When this turns green, sure. If you think that's a distraction, then do it this way. You can turn the long term off. Aussie Swissy. Okay? We want to buy a dip. Medium term trend is up, short term trend is down. Is it dipping? Yeah, maybe. So you can just sit here and wait for it to turn green. Or at least look at the slope of the mean. Okay, the slope of the mean indicated right here. You want to watch it go flatten and then go vertical. Or no, well, not vertical, but be a positive integer. Which is a fancy way of when the short term is giving you higher highs and higher lows, you're long. When the short term is making lower lows and lower highs, you're not long, even though you're a bull. So now you wait. Okay? You wait for the congruency of trends on time frame. Do you need this as well? No, because we're probably reversing that. So you may like this. This might be enough for you. This might be enough for you. When that turns green, you're going to go to your charts and do what needs to get done. How many people like this, the clarity of this? Well, the thing is, you already have to know that you're hot to go HOTTOGO on buying Aussie. If you don't know that, then you're not going to get to this. So you have to have some clarity of yourself of what you want to do. But this will help you identify exactly when to drill in. Manuel likes it. I love it. Yeah. Because some of you guys will make the mistake of looking at a 15-minute chart and trading that like it's the only thing. And you forget that, well, the longer term trend is down, but you just see the 15-minute chart up. So you get going, it does okay for a while, and then it collapses, and you don't even know you're buying in a downtrend because you don't even see it. You didn't even look. Or if you go through 75 charts, which we all tend to love to do, you forget the 3 time frames on all 75, and all of a sudden you're like, wait, what? Is Aussie Swissy? Well, Aussie Swissy was bearish, is flattening, and potentially reversing, and I see all of this now. Long term, medium term, short term. Cool. And so just like that, done, and you can see it. It's easy to understand. Johnny likes it. What's up, Johnny? Yeah, man, I got to get back to Manhattan so we can go for cigars and cocktails again. Cool. What do you think about the stock market right now? It's not happening in Japan. Hey, maybe it has something to do with elections. Maybe it has something to do with debt. Maybe it has something to do with the Bank of Japan and all these things. German stock market not loving life and living large right now. Why? I don't know. It was a good thing. It was a good thing last year. Does it mean it's a good thing now? Well, you might have bought DAX cheap a year ago, but they are missing the AI revolution. So you're like, okay, I bought DAX cheap, but now I'm done. Let's get back to America. And in America, up, 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 up. Interesting, right? Do you guys need the cacron? Anybody trading the Kakran? No, but we could use some footsie here. I think. Oh, no, we got the footsie. All right, so. Yeah, wait until. Oh, for sure, Johnny. For sure. That goes without saying. Yeah. But we can meet up and hang out with Maida, drink some cocktails on the beach. Mojitos! And cigars. Yeah, it's just we go from concrete jungle to the beach, tropical beach, drinks change. Traders are traders. So, anyways, let's go back. What is this all about? All right, first of all, in 1 second, we can see what's going on in the stock. Great. On 3 time frames, but right, mine. 3 time frames, boom. And then we're like, let's analyze it. Okay. Looks like could be an opportunity to buy a dip. What do you think? So in this situation, you're like, I just want to look at the very long term with the very short term. Good. Like that? You're like, yeah, actually I like that. Cool. All right. What about NASDAQ? Yeah. Maybe I'll buy a dip. Yeah, maybe. Sounds good. FTSE. It's already on its way. It's already making higher highs and higher lows, and it's accelerating. Jiminy Cricket! Dow. What? What do you think? Are you happy with the Dow compared to the S&P or the NASDAQ? No, not happy with the Dow. Okay. What about this? Well, as soon as this upward move, if or when the upward move turns red, turns down inside of this downtrend, it's time to sell. What about DAX? Okay. We're close to the bottom. And you might have already missed that move. You already missed it, bro. It's cool, right? I hope you guys use this. I hope you guys use this. Okay? This is free. This is free. This is free. Hang on, it's doing a lot of calculations. This is free. This is free. And this is free.
The oil market is raising the risk of a U.S.-Iran war.
Chainlink price forecast, link tests, key support as retail interest cools.
U.S. trade deficit widens more than expected to $56.8 billion in November. United States wholesale inventories remains unchanged at 0.2% in November. U.S. November factory orders plus 2.7% versus plus 1.6% expected.
United States factory orders, MOM, above forecast 1.6% in November, actual 2.7%.
XRP faces downside risks as low retail activity slows. U.S. dollar Canadian dollar slides to 15-month low as rising oil prices and Bank of Canada outlook lift the loonie.
Yeah. So here's the thing. We have a secret program that I'm going to make public. TRADARS you can join for free, like I showed you. Just all those resources I just showed you, totally for free. No credit card needed, no nothing. It's super easy. But it's a freemium program where you get tons of value for free, but check it out. Wait. Stay with me. You can upgrade. You can pay more money and have even more awesomeness, like AI coaching or human coaching. So you understand all of this stuff. Or you can just have the data and do it yourself. Totally fine. But what I'm trying to say is we have a secret program, and I'll bring it back and make it public. But if you if you use our trading execution partner, Trader's Way is one. So you sign up inside of TRADARS, sign up for a special account that only TRADARS has for Trader's Way, and it makes your trading cheaper. And if you trade enough, you'll also get rebate back, so that let's say you're paying the $200 a month, you can get that $200 back. Some of you do. Or maybe you'll get some of it back. Maybe you'll earn $100. Maybe you'll earn $125. So it may not be 100% free, but it's super cheap. And so, I mean, look, again, the data analytics becomes cheaper free, and your trading becomes cheaper. You actually get a rebate, not just from us, but from our execution partners. They put some cash into your trading account, but I send you cash to your PayPal account. It's hard money cash. But Trader's Way, for example, would put cash into your account that you can actually withdraw if you want it. But it's just there to make the spread cheaper, because you're awesome, because you're with TRADARS. So anyways, that just happened. Wait, what?